Hi friends, today I want to share with you a very important thing regarding my post, how to use the post. First of all, you have to remember these are educational posts. So if you are a beginner, if you are recently starting into stock market, don't jump into trading this patterns, whatever I am sharing with you. Have a look at it, observe how it behaves, and then once you have expertise experience of observing it properly, and then you can plan of trading on your own. That is point number one. Point number two, those who have been trading, again they are doing one simple mistake. As soon as I post a video, uh, they think that okay, it's a green signal to buy, and they are buying the stock, which is not the case. It should not be done. I am giving proper step by step instructions how it has to be observed. Please remember all these patterns, triangle, head and shoulder, and other double bottoms, are double-edged sword. It can go up, it can go down. The objective is to first to identify and be ready. We should not jump. If that was the case, I would simply say okay, this is likely to go, give the stock name, and people can jump in and buy. So that is not the case. First of all, I am not advising to buy. I am only advising you to observe and learn, be comfortable, then you can decide what you have to do later. Once you have seen around 30-40 videos, once you are comfortable also, that time also you have to follow this step by step process for trading any triangles. First step number one, you should know that the triangle is a double-edged sword. It can go up, it can go down. So a breakout has to happen. Without breakout of the triangle, we cannot go and trade. For example, I'm sharing the screenshot for Nike. Here, this is the head and shoulder. Now, does this mean that we, whenever we see this, we go ahead and buy and then we hold it for long term? No, this is purely based on technical analysis. So we have to wait patiently for some things to happen. And what are those things? First thing is it has to close above the neckline. That is how the technical analysis has to be traded. First of all, it has to close above the trend line. If you're confused what is closing means, then change this to line diagram. This line blue dot should be above the neckline. If you are confused, just look at the line diagram. In line diagram, the line chart, this should close above the neckline. Then only next day you go and take some action. That is the thing number one. Second most important thing is when you are trading based on technical analysis, you must have a stop loss. Don't let a short term trade turn into a long term investment. Suddenly, don't become a long term investor in that stock, because the patterns what I am uploading on YouTube are based on the short term trading patterns. No fundamental analysis has been done on those stocks. These are purely based on the price action. So they should be treated based on price action. And whenever you are trading price action, stop loss is very important. Take a small loss, come out of the uh, trade. If it is falling down, going against you, follow a trailing stop loss. It is okay to take small profits, but to hold it just because it has gone against you and keep on holding for next 10 years is absolutely wrong when you are trading based on technical analysis. When you are doing for a short term, we have to be always ready to cut off with a small losses. It's, I know, with my experience I have seen it is very difficult for majority of people to exit any trade with a loss. But believe me, it is better to cut at a small loss rather than seeing it going down and down. Just see this stock. Someone must have not thought of coming out of here, and he must be sitting on a 75% losses as of now. So these things happen in stock market all the time. In the crash of 2008, the entire market went down by 80%. So it is nothing that there is nothing like long term when you are taken a trade for short term. So very, very important. Please go through this video multiple times. Please understand that this is a stock market trading. You need to have an exit plan for sure, on profit, on losses, both. Don't look other way once you have losses. You should cut off your losses, take that money, keep in your pocket, wait for the next opportunity. That is the essence of stock market. Thank you for watching. If you like this video, press like button, comment, share with your friends so that they can also understand and learn from whatever I have shared today. Thank you. Thanks a lot. See you in the next video.